The sovereign debt crisis being played out in Europe once more confirmed the same by the rumor, sell the news. First, amputation of Greece was ruled out. Next, surgical budget cuts for debt-laden sovereigns was not acceptable. It seems prolonged medication with shots of steroid in the form of stimulus was a consensus choice, even if Europe had to remain bedridden for longer. EU summit over. ECB cut rate last Thursday to 0.75% amid slowing growth across Europe. Apparently, bringing down deposit rate to zero is also not ruled out to discourage banks from parking excess liquidity of around 800 billion euros with the ECB overnight. But markets sold off. Stock markets across Europe and America were lower. Spanish 10-year yield jumped 70 basis points to reach a precarious 6.87%, only 13 basis points below the danger mark of 7%. Euro was not spared either. Against the dollar, it was sharply lower at 1.229, down 3% from a recent high of 1.269. In contrast, Goldman Sachs has come out strongly in favor of investing in BRIC countries. The logic is straightforward. Combined market cap of BRIC has dropped to 16% of the global market cap, while they comprise 20% of the global economy. Consequently, the difference of 4% makes BRIC markets irresistible for long-term investment, especially when BRIC's share of global economy is poised to jump to 27% by 2020. This should make India an attractive destination for FIIs. Well, by investing 5,780 crores, or about $1 billion last week alone, FIIs seem to confirm the hypothesis. Like in January this year, when rupee fell sharply to 53.54 against the dollar, they probably see 55.56 as an attractive entry point for Indian stocks. But Nifty's rise in comparison was rather muted, a mere 38 points or less than 1% in a week. Fundamentally, nothing has changed so far for the better. Indeed, 1 month into the monsoon, deficit rainfall is looking threatening, which in turn could keep the food inflation at elevated levels. And that, in turn, may impede RBI's ability to cut rates further. Government is in no position to take decisive action until Pranab Mukherjee is safely into Rashtrapati Bhavan. In sum, it is still too many statements, very little action. The next fortnight, therefore, holds limited promise to help stocks. Technically, Nifty still looks strong. While the short-term trend can take Nifty to 5,400 levels, downside appears limited, notwithstanding a possible weak opening on Monday under the weight of the global sell-off. The intermediate trend is up, while the long-term trend seems to be strengthening. Recent breakout above 50 and 200-day EMA tends to confirm the view. With FIIs on the buy side and DIIs not committing either way, there is little bear pressure in the market. Percentage play, therefore, would like to play next week on the long side. In Quant Pair Fund, we managed to close another 2 pairs last week at a profit. With this, our record of win to loss since inception stands at 81%. 80 wins versus 18 losses in over 14 months. The modifications introduced to the algorithm have widened the scope and we are now getting more calls. However, we kept our allocations low to start with in order to get more confidence in the expanded system. Our overall outperformance with Nifty presently stands at 29%. Going into the results season next week, we will move into silent periods for each stock around their respective result dates to avoid event risk. Consequently, the frequency of transactions will drop till the season is over. We chose to avoid fresh entries in competitive value fund since we didn't find any conviction buy. Market has barely moved since the start of Q4 result season in April. Will earnings for Q1 disappoint? Perhaps yes. Will it dent prices appreciably? Possibly no. So for the next week, Alstom and Hindustan Unilever are on our watch list on the long side. Wipro, Bank of Baroda, Bank of India and Power Grid seem to be on the verge of breakouts which could go either way. Market remains difficult to call as a fair selection of stocks are close to the end of their short-term uptrend. Our newly launched quant trading systems put up a great show last week with the scorecard for the 2 systems being on track. In Power Swing, a number of small losses were more than offset by the large profit made in sale. Our absolute return moved up marginally to 27% in 45 days. In Rapid Fire, our performance metrics were steady with share of winning trades at 67% and share of up days at 65%. We plan to soon start a separate update for QTS members as there are a lot of new initiatives in the office.